Hello, chart watchers and Decision Point faithful. Welcome to this Friday, March 29th, 2019 Decision Point show with your hosts, Carl and Aaron Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. You'll find us here every Friday from, 4:30 to 5 p.m. Eastern time. So you don't want to miss the show. All right, well, let's look at what we're going to do here on our agenda. But first, I want to welcome in my dad. How are you doing today?
Pretty good.
Pretty good. Yeah, it's a pretty nice day. So I know I'm enjoying it. It's looking outside my window, of course, while I watch charts. So anyway, let's see what we're going to do. So it is the end of the month. So we're going to look at not only the weekly charts, but we'll look at monthly charts as well. And of course, I will review all of the scoreboard indexes. We'll look at the DP indicators, and then Carl's going to do the dollar, gold, oil, and bonds. So you can stay tuned for that. And then after, for our bonus material, we're going to actually look at the global markets. We'll look also at some of the broad market indexes. And then we're going to discuss why we prefer the S&P 600 to the Russell 2000. And granted, I do have the Russell 2000 charts in the Decision Point live chart list, which you can get to by going to our blog. And right there at the top of the page is the link. But everybody wants the Russell 2000, Dad. I just don't get it. So I have it in there, but I'm going to be convinced, I'm sure, as our audience, that we need to switch it. So we'll talk about that more at the end. All right, so let's start off by just looking at what's going on with the DP scoreboards. It's been kind of a back and forth, really, between short-term trend model and PMO signals. Today, we actually did get a short-term trend model buy signal on the Dow, which replaces the neutral signal that came in 2 days ago. So not a big surprise. The short-term trend model, we don't pay that close of attention to those signals because it is the crossovers of the 5-day EMA and the 20-day EMA. So you do tend to get a lot of whipsaw, but we do put it in here just so we have a match, really, for the PMO signals. So the important signals that have come through, in my opinion, right now are these PMO sell signals on the OEX and on the Nasdaq-100. Now, the S&P 500 had gotten its earlier back in March. Did actually whipsaw last week to a buy, but then immediately to a sell. So I kept the old date because I thought that was more relevant to what was going on. And the Dow never has gotten close to a buy signal. We didn't get whipsaw or anything there. The Dow's PMO is still firmly below its signal line. All right, when we look at the Decision Point sector scoreboard, we're looking at the intermediate term trend model and the long-term trend model signals. So if I'm going to go back just to give you some context, that would be these two boxes right here, the intermediate term trend model and the long-term trend model. But we're looking at it just for our spider sectors. And really at this point, we're on buy signals in the intermediate term for all of the sectors, meaning the 20-day EMA is above the 50 for all of them. And as far as the long-term trend model, the 50-day EMA is above the 200 on all but 3 of the sectors. Energy, financials, and materials are still holding sell signals in the long term, which means that 50-day EMA is below the 200-day EMA. One thing I wanted to look at before I got started looking at some daily, weekly, and monthly charts is just a peek at what's going on the relative chart right now as far as the mid caps and small caps, and also a look at what's going on with the Nasdaq-100 and S&P 100 in relation to the S&P 500. The thing I watch here is I really am watching the small caps more than anything and the mid caps, because we want to see them start to perform relatively better to the S&P 500 to start increasing their move to the upside here as far as the relative strength. And I say that because typically when you're seeing a rise in relative strength out of the small caps and the mid caps, like we saw back here, came off of that December low, and it helped fuel that rally to the upside. So I like to see small caps beginning to perform relatively better than the 500. And right now we are starting to see that. All right, let's go ahead and we'll move right into our charts. And here is the first one we're going to look at. And let's go ahead and make this a little less complicated and bigger. Okay, so I'm going to start, like I said, with the daily. I'll do the weeklies and monthlies. I'm going to pay more attention to the Dow, the Nasdaq-100, and the 500 more than the OEX because it pretty much travels the same as the others. But let's start with the Dow. At this point, you know, I had been watching what I was thinking was a, see if I can get my mouse to start appearing again. Hang on. This seems to be a common problem for me. All righty, let's go back to there. All right, there we go. Okay, so I had been watching what I thought looked like a double top forming. And at this point, when we got this rally and it really comes off these this rising bottoms trend line that I had put in here earlier. And so at this point, I'm seeing a symmetrical triangle, and that is a continuation pattern. And so that typically. And so the expectation would be a breakout. You know, the PMO is starting to suggest that might be a possibility. And I do note that the OBV is getting ready to set a higher top than we saw earlier. You can already see that it's a positive, I'm sorry, reverse divergence, I believe. Am I correct here?
Right. Yeah. The peak about mid-March on the OBV is lower than today's OBV reading. So
right.
It is a reverse divergence. You know, to lock it in, it really needs.
It needs to have that top. Yeah, and that'll give us a better idea as well when we look back here at when we get closer to this top back here in February. But for now, you know, the PMO is starting to turn up. Volume seems to be behind the move. I'd like to see price contributing a little bit more at this point, but, you know, I can't complain. It was definitely a good day today. All right, weekly for the Dow. You know, I'm looking at the possible flag formation on the Dow on the weekly chart. You'll see that on some of the other large caps. I think that also bodes well. We do see a PMO buy signal right now on the weekly chart. I think the weekly chart looks pretty good, and you can see we're also holding support along that 17-week EMA. So I think all of that is positive. Be interesting to see if we can get back up into this rising trend, though, that we had back starting in 2016, because we weren't able to do that this last peak. All right, quickly monthly chart here for the Dow. Nothing new. What I want to point out on the monthly charts mainly is the fact that we are seeing a deceleration on the monthly PMO. And the monthly PMO signal being on a sell is what really sparked my conviction as far as a bear market and it continuing. But now we're starting to see some deceleration on these monthly PMOs. I think that speaks to, you know, we had that bear market. I mean, I think honestly, coming down to that December low is likely an area we're not going to see at this point. I certainly could be on board for a correction at one point, but I think this is positive to start seeing these monthly PMOs turning up. All right, Nasdaq-100 PMO sell signal still intact, but you can see today's trading. We managed to get all the way back up above what we were looking at as these previous tops for resistance. And so that was good news. But I really am paying a little bit more attention to the 7,500 level and the 7,200 level. I think between there is where the action's going to be here for the Nasdaq-100. It looks like we might be heading back up to test the top, but, you know, the PMO isn't quite cooperating just yet. Weekly chart, we have, again, the failure to get back up above and into that rising trend we saw earlier, starting from 2016. And we are still on a buy signal on the weekly charts. So the weekly charts, I think, still look pretty healthy. I can't really say there's anything horrible here. Monthly chart, I am looking at, again, that deceleration from that sell signal that came in at the end of November. Again, I think these I do like to note that these signals, especially these ones that came in at the end of November, were quite timely as far as what we were to see the following month in December. OEX, rising wedge, you're going to see the same on the S&P 500. Deceleration on the PMO, but we're not seeing a bottom just yet. The expectation is, of course, that's a bearish wedge, and you expect a drop below a breakdown. Weekly chart, I think, is still looking healthy. Again, there was that area I pointed out on the other chart from the daily, that top, and we haven't gotten above that yet. From the let's see, what was that, October, November timeframe? We haven't gotten quite above that. We did, of course, last week, but we weren't able to do that this week. But it was still a 1% upside move.
It'd be worth mentioning that it's not necessary that price recapture that rising trend line in order for the bull market to continue. It could easily, retreat, and we could be drawing a line from that low in 2016 to the low in 2018. Yeah.
Yep.
We could be looking at a higher, a less accelerated rising trend.
Well, that would certainly be better than what we're seeing right now. That's going to be a tough one to maintain, these straight up moves. At this point, the monthly chart, again, you're seeing a deceleration of the PMO. But let's look at the S&P 500. I have had this ascending wedge here for quite some time. I thought we were going to get on Wednesday. It looked like we had gotten, we might have broken down and executed this wedge, but price did end up coming up and close up. It did close above and inside the wedge. So I didn't count it as the wedge being executed, and it looks like it's not going to happen this time around off of that test. But it'll be interesting, honestly, to see if we can get back up and test the top of the wedge, or if we're going to slide and not quite get there and then come back down. I think that would be a sure, almost a sure sign that we'll see the breakdown if we don't get back up and test the top of the wedge. But we'll have to see what happens with that one. The weekly chart for the S&P, again, similar situations here. You've got the PMO buy signal. It's still rising strongly. I don't see anything except for the resistance level here from that 2018 top back in, the beginning of the drop that we saw, that big correction at the end of January, early February. So I'm watching that top. We'll have to see if we can get the S&P back above that area. I think there's certainly a good possibility we might see that. Certainly the weekly chart is telling us that there's not anything to get too concerned about just yet. And the monthly chart, there you go. That PMO is turning up. That is really giving us I would say, the high sign that we're likely out of the woods as far as testing that December low. We had some fake outs over time. You can see we will see the PMO decelerate and turn up even before you're done with the move. But in general, I think this is a good sign. All right. And at this point, I'm looking at IWM, the Russell 2000. Declining trend channel. Don't really like seeing that, but it does have the opportunity right now as price meanders its way up toward the top. We might get that breakout. And then I'd start looking at this level right here. I probably should redraw that, but it looks like it's, I set it up right here on this top back from October, and it kind of lines up nicely with the top back here in February. So that's where I would be looking for price to make its move. PMO is turning up above the zero line. I think everything's looking fairly healthy for small caps. And like I said, relatively, it does appear that they're starting to perform better. And here we go, flag formation, I would have to say, all over the place on the weekly chart. It's a bullish continuation pattern. It looks pretty good here. You've got the PMO is still rising. It hasn't quite gotten above the zero line, but I'll be watching this one pretty closely and see if we can't get that breakout from that declining tops trend line on the weekly chart. But boy, it just looks like a flag to me. Russell 2000's monthly chart. Now, the interesting thing I note here is we actually are getting a little acceleration to the downside on the Russell 2000's monthly chart. I would certainly want to be seeing some more deceleration. We started that, you know, when we came off of that December low, we started to see some deceleration, but it's trying to accelerate back down. So that could be an interesting development and one we don't want to see. All right, ultra short-term indicators, you know, somewhat climactic readings on breadth. I can't get excited about reading them as anything potentially exciting at this point, but they are elevated, and really the VIX is what I'm paying attention to right now. It's now gotten back to you know, above the average here, and again, this is inverted. Lower readings to us are overbought readings. You should start expecting that reversal when people are getting super complacent. And at this point, we're not quite there yet. I think there's still probably some more upside that could be taken into account. We could just be looking at a continuation of the rally that we had today. Continuing to the upside, we'll see. And I think the short-term indicators are supporting that because they have turned up and they are rising strongly. They're both now above the zero line. And I think that that's all positive. It suggests to me that we're going to continue to see some more movement to the upside. And intermediate term indicators have really started to look a lot better. We had that the tops below the signal line. That's generally quite bearish, and it turned out to be relevant when we got that. We had tops below the signal line earlier. We did come in off of that decline. I'm guessing that's when they came in. But right now, what I like is we do have, not only have they bottomed, but the important thing is right now I'm seeing that positive crossover. I like to wait for the crossovers before I get too excited about the intermediate term indicators moving up. So I think that's a positive that we're getting that crossover. I have to say, though, I'm looking at this and, you know, I don't like the fact that the volume indicator, the ITVM, we're seeing lower bottoms versus flat bottoms here on the ITBM. I won't lay any major significance on that, only to say that might be giving us a flag to keep our attention on this chart. All right, let's move on to the big four. I'm going to pass it over to you, and let's just move quickly on through, and then we can get to the fun stuff. All righty.
Okay, the dollar is still in a rising trend channel. It's actually a rather loose rising wedge. Not any indication that it's going to resolve anytime soon.
Right. Yeah, it's still.
Take a look at the weekly. Same situation here. And note that the weekly PMO is moving sideways all year above well above the zero line. So that shows that there's a steady amount of pressure to the upside. Oh yeah, we're seeing the trading range that we're approaching the top of. That's it.
Okay.
Then for the long term, I switched to the dollar index, which doesn't track very closely to UUP, but is still useful in terms of the long-term outlook. And again, we've got the monthly PMO is above the zero line. It's been moving sideways for a few months, but it's rising slightly now. And the dollar is in a rising trend. That's it. Gold was disappointing this week.
Mm-hmm.
We had it was moving pretty nicely towards the top of the trading range, and then broke down and recaptured some of that loss, but then broke down some more on Friday. Still, we've got a positive PMOs moving sideways, so it's all is not lost.
Okay.
So we jumped. I think we jumped from the monthly to the.
Oh, it looks like the.
Looks like I
weekly.
dumped the.
No, it's weekly.
The daily, but that's all right.
Mm-hmm.
Let's go ahead on to the monthly.
Oh, monthly gold. Hang on. There we are. There's that range.
The trading range, multi-year trading range, and it's been hanging mostly to the top part of that range. The monthly PMOs positive, not hugely so, but it's still positive and moving higher above the signal line.
All right.
USO rising in a loose rising wedge, a good looking PMO. So it's above 2, +2, and moving sideways, which means that the pressure is steady. There's no not a lot of fluctuation there.
Mm-hmm.
The weekly, we've got a very tight rising wedge. It should resolve within a week or two, I think. And of course, we think that this is a bearish formation, so we expect it to resolve downward.
Mm-hmm.
Crude oil, the most recent top in 2018 was around 76, and I don't see any impediment to it getting back up there, although I think that's also likely to be a pretty good line of resistance.
Mm-hmm. Bonds have been taken off.
Yeah, they really had a week, and you notice that's essentially a flag. It broke out of the flag formation, and it's meeting expectations.
Absolutely. Oops, that's not what I wanted.
You can see now it's broken above its trading range. It's still not a decisive break, but it's looking pretty convincing to me. And weekly PMO is standing on end, moving higher.
Yep, higher than previous tops too. That's good.
Right. Mm-hmm. And bonds, long-term look at it. We're heading back up to the top of a rising trend channel, and you know, the Larry Kudlow said today he wants them to do another rate cut rather than a rate hike. So you know, the recent bullish or dovishness of the Fed is really behind all this up movement in bonds, and I don't see any major problems getting in the way of higher prices unless the Fed changes its tune.
All right, bonus.
Okay, I am usually very focused, hyper focused on the S&P 500, and I wanted to look a little broader, look at global markets, and it came to me that, oh, what a good way is just to line them up like this. I don't like to do a lot of, I would want to be going through chart after chart on a regular basis, but this gives us a good overview. You notice that for the European markets, for sure, the long-term top was in the beginning of 2018, and it's still, the declining tops line is still intact on those, as well as the Nikkei.
Mm-hmm.
And the Hong Kong index has rallied nicely. It's back up to its all-time highs, and but China is not nearly as frisky, but it's still done fairly nicely. It's a 20% move. Now you notice that some of these, all of these, well, not all right, some of these markets have are confirming the S&P 500 double top, I should say rising tops line. Japan is a little sluggish, and Hong Kong is not, well, it did today, didn't it? Looks like behind the red line there. I think it got into that today. So anyway, this is going to be a regular chart in the weekly wrap, so we can quickly look at what's going on globally without getting into a lot of tedious detail.
There you go.
Translates into making Carl work too hard. Okay, here we have, again, we've got a new chart that I'm going to put in the weekly wrap, and looking at broad market indexes. I note, if you note the in November, December, we got those tops, lower top in December on the S&P 500, and then if you go down to the other indexes, they're all in agreement with that declining tops theme. But now let's look at, currently we've got a rising tops with the S&P 500, but then the RSP line, which is the equal weight, it's a double top. The mid cap and small cap and industrials are declining tops, so they're negative divergences. The only one that actually agrees with the S&P 500 is Nasdaq Composite, and the reason for that is the Nasdaq-100 is so heavily weighted. And if you look at the RSP line, we had an argument about whether we should be using the S&P 600 or the Russell 2000. The reason we use the S&P 600 is we have charts, market charts on the S&P 600, and that's something you don't have for the Russell 2000.
There it is.
If you can just click through those charts.
Oh, okay. I was going to say
Just the ones I have up there.
All righty. Excellent. I'm happy.
TBM. And these are all based on the components of the S&P 600, and so that's why I'm saying if you use the S&P 600.
Yep, and we will. I'm going to move that. I want to thank everybody for being with us here today. We're going to go through those charts next week for sure. Love to get your feedback. Remember, we're here Fridays at 4:30 p.m. Eastern. Have a great weekend, everybody, and happy trading.